Hello and welcome back to Explain the Charts. Today we're going to be doing an in-depth analysis of GBPUSD, taking into account both recent news and the technical aspects of the charts. As we can see from recent headlines, the GBPUSD pair has been significantly impacted by recent US CPI data, dropping below the 1.2400 level. This is a significant event that has triggered substantial volatility in the market, and we will need to examine what effect it has on the charts themselves. However, despite this downward pressure, there are still some positive trade setups that remain present on the GBPUSD chart. Let's start by looking at the daily chart to get a broad overview of the current trend. Zooming in on the daily chart, we see a clear downward trend over the past week, but signs of a potential reversal are starting to become apparent. Notice how the price has bounced off a key support level of around 1.25, indicating that buyers are stepping in at this level. We can anticipate this to be a support level in the short term, but more volume and candle strength are needed to confirm the reversal. Switching to the 1-hour chart, we'll examine the more immediate price action and look for confirmation signals of this reversal. Here we can see that this bounce has taken on a shape that has been observed in the market in the recent past. The short-term price action suggests the support level of 1.25 is relatively strong. Finally, let's look at the 15-minute chart to pinpoint entry and exit points for potential trades. Here, we can see the GBPUSD pair is consolidating within a range, and breakouts from this range can offer potentially high-reward short-term trades. If the price breaks above the resistance level of 1.26 and the volume increases accordingly, we could see a push toward 1.27. Alternatively, a break below the immediate support level of 1.25 could trigger further downward movement. However, it's essential to consider stop-loss orders to limit potential losses. In summary, the GBPUSD pair is exhibiting a dynamic interplay between bearish and bullish pressures. While the recent US CPI data caused a sharp decline below 1.24, the daily chart shows some signs of short-term support and resistance. Support at 1.25 and resistance around 1.26 are worth monitoring. The 1-hour chart provides further insight into intraday fluctuations. The 15-minute chart is vital for identifying precise short-term trading levels. Short-term breakouts from consolidation ranges offer potentially profitable opportunities. There are short-term bullish scenarios around 1.26 with short-term bearish scenarios below 1.25. Long-term predictions require observation of how the current trends evolve over time. It is highly unlikely for the price to break past the support and resistance levels identified if current market conditions remain unchanged. Important upcoming factors include further economic news releases, especially those tied to the U.S. economy. Changes in market sentiment and external geopolitical events could drastically affect these projections.